Okay. Go ahead.
All right. Thanks, David. Welcome, everybody. Appreciate being invited back to Timing Research here today. These are always great sources of information. I hope you guys have had a good day so far today. Some of you may or may not know who I am, so I'm going to introduce myself briefly. My name is Doc Severson. I've been in this business since 2005. 2005 is when I put in my notice at my job at a three-letter acronym, huge telecommunications company. I was a product manager for them for a number of years, and I just got sick and tired of the corporate rat race. So it was a combination of inspiration to trade for a living and desperation to get out of a cubicle and conference call environment. And most of you know what I'm talking about with that. So I've been doing it since 2005. And what happened shortly after I did go solo is that people started knocking on my door. And so almost at gunpoint, I have become a performance coach for trading. So some of the past services you may have heard me at is either Options MD, ThioTrade. I've been a contributor to them over the years, Doc's Trading Tools, and then my original service, which was the Options Linebacker. The site is still out there. I don't know why. So the current services that I do trade under are ReadySet.trade and ReadySetCrypto.com. So if you're interested in crypto, although today is not, today's a bloody day for crypto, but this is why we also trade the equities market. So my specialties are fractal price analysis, options and future strategies, and then out of necessity to fix my own cranium is trading mindset. And because of that, I wrote a couple of books that are out there on Amazon.com right now. First one was Hacking the Holy Grail, which is more about the overcoming the mental challenges of trading and finding something that you're meant to do. And then last year I came out with Fractal Energy Trading, which is sort of my, well, I'm going to talk about exactly this today, the 4 major rules of fractal energy trading, which has allowed me to simplify this odious task here. All right, so that's who I am. Now, what am I going to do for you today? My purpose of talking in front of you guys today is to, I like to make things simple, right? I've tried just about everything out there, from the complex to the ridiculous. And what I found was that the simpler that I can make things, the better off that I do, because I'm a simple creature. Trading is fairly simple. We tend to complicate things. And so I want something that doesn't complicate anything. So today, what I'd like to do for you is to give you a few simple and what I think are powerful ideas. And we're just going to share them with you. And I hope that you can create a masterpiece out of them starting today. So that's my purpose. Ready, set, here we go. First of all, what I'd like to do is, since I am a former and recovering engineer, is that I like to identify what the problem statement is. Because engineers, you put a problem in front of an engineer and all of a sudden it's like, whoa, hey, this is fun. So I'd like to work from a problem statement. And the problem that I found is accurate charting and price discovery leading to a directional edge is something that is very difficult to do. And it's due to our own embedded human nature, because we always start the wrong way. See if this sounds familiar to you, how we all start. So unless you're lucky enough to snag a job on the street, everybody starts in the same manner, because humans are herd animals. What is one of the favorite things that you can think of doing? For me, it's to go to a sporting event where I'm surrounded by 90,000 of my closest friends. So it's in our nature to go with a crowd. No one wants to feel like they missed out. This is one of the most painful things in human existence, is to feel like you've been left out. How does it feel when a rally goes by without you being on board? It's extremely painful, and psychologists have proven this, that it's more painful than taking a stop out. This is why we do what we are. We're human. We are herd animals, and this is the way that we make decisions and go for things, right? So there's nothing wrong with that. But we're also used to using social logic, and this has come around particularly in the last 20 years, where all of a sudden now we can't seem to make a decision without looking at the number of stars behind a review. So whether or not I want to go to the Bacon Bros, or if I want to buy some type of ninja materials on Amazon, whatever it is, I can make a decision based on the number of stars. Oh, this is a 4-star, but it's only $24.95. Maybe I'll forego that 5-star $300 Ninja kit. So that for the better part of a generation, we have outsourced or socialized our decision-making process. We all do it. I do it. I start off with the 5 stars and work myself down from there, right? So we trust other people with this. The problem is when we get into social investing. So most of us do the same thing when it comes to investing. When we learn how to invest, we learn how to trade, we say, hey, this works for Amazon. Why can't this work for trading and investing? So we get into financial markets thinking that we can just go along with the crowd. And we're seeing a lot of this with Discord and with the Wall Street Bets crowd and Twitter and you name it. However you get your ideas, it's very easy to get into social investing. But the problem here, and those that are, here's a chart of AMC today. So AMC was one of the big players on Wall Street Bets just a couple of months ago. And now all of these apes are getting, in pain at this price. So the problem is you're always chasing after stuff. You're going to wait until things feel good. You're going to wait until there's a quorum or basically agreement or consensus on something before you invest. And that almost guarantees that you're going to get in at the top. This is never going to work for you long term. And then what most people do is once they get sick of that, they say, well, all right, I'm going to go into the traditional media. I'm going to look for the media to provide me support and guidance. And guess what, guys? It's just about clicks. You're not going to get any edge looking to CNBC or any of these other websites. So ultimately, we're frustrated and we say, man, I just want somebody to tell me what to do. Feels like everybody is out to take advantage of you. But the thing here is that you've got to learn to think for yourself. If you want any edge, if you want to get different results than the rest of the market, you have to be willing to do what everybody else is not willing to do, and that's independent thought. And so this is why it's such a challenge these days with our analysis. Is it seems like everybody goes through the same process here. We think that we can use the same things that worked for us for the rest of our lives and our jobs and things like that. And then we get into the financial markets and we realize that everything is upside down. It just doesn't work like that. So you got to find your way. After many serial disappointments, those that make it, they always talk about some single-digit percentage of people that actually can make it trading. And it probably is that. And it's because you have to learn to think differently. And many, many people just can't do it because they have to go along with the crowd. And as long as you go along with the crowd, you're going to have the same results as everybody else. You're going to be disappointed. So one of the things you got to do is you got to understand what you were trading. You've stopped being a jack of all trades and a master of none. You finally know what you trade and why you trade it. You got a plan. Failure is not an option. You're treating this like a business. Now, when it comes to price discovery, it used to be that the key to success was to be on the floor, but all those floors are shutting down these days where you could literally see the price moving in front of you based on the body language of those that trading in the pit with you. But no longer is that the case. And this is why many former floor traders have a hell of a time trading off the floor, trading on a screen because they can't read the price discovery. So today's challenge is it's just you and the chart. And we've all felt exactly like this. Like we're trying to figure out price discovery based on what the candles are showing up on the chart. And it's still creating this emotional experience because we're trying to trade with the crowd. So that is today's challenge, to find your way. Now, here's how most people fix this. And this is the stage that most people go through, which is more is better. So we can't get a grip on what's going on. What we do is we keep bolting things on. So we'll start with price only on our chart. And we say, well, I don't know what's going on here. I can't read that. So I need some moving averages. I need the 50 and the 200-day moving averages so I can see the golden and the death crosses and all the trends and everything that goes along with that. But we realize that these are severely trailing signals. So what we need to do is everybody knows you got to have the MACD, the moving average convergence divergence on here. And so we start to add the MACD, and that's great. Okay, but it's still a little bit trailing. So we need some signals. We need oscillators. We need stochastics. Everybody knows you need MACD and stochastics, but that doesn't seem to work well enough because we keep shorting the market when it's overbought and it doesn't work. So what we need is the RSI. There we go. Everybody knows you need the RSI in your chart to know whether things are overbought and oversold. But that seems to still not do it. So, of course, John Bollinger's invention adds volatility to the price envelope. Okay, this is great, adding the Bollinger Bands. And then if we add the Keltner channels, we can actually create what's called the squeeze indicator by looking for when the Keltner's inside the Bollinger Bands. But that doesn't seem to be good enough because there is this cool thing out there called the Arun that people seem to like. So a friend of mine put it on there and he made some money. So let's add it too. And then, of course, there's one more thing. We need to know what the trend is, the strength of the trend through the ADX. And so you get to this point and you're like, you don't know what's going on because what you've done is all of the information has been compressed into something that you can't even read anymore. And try telling me what to do with all of these indicators showing something different. You just don't know what to do. So you've got analysis paralysis. This is where everybody gets to this point until you start shedding material that you just don't need. So more is not better. This is not right. What you'll find is that most professional traders have very, very simple and crude systems. There is a simpler way. We need to simplify our approach to see what the answer is here. And this is where I get into what I've called the 4 rules of fractal energy trading. So this is basically the basis or the notion of the book that I wrote. I used to be overwhelmed by market movement. I added way too many studies to my chart. I kept adding just one more study and thinking that that would be the one that does it. And actually the answer is to add less or to start with less and keep taking things away until you get clarity to your decisions. So I've got 4 simple rules to analyze any chart. Let's go through those right now. Okay, so the 4 rules of fractal markets. And what I say by fractal markets is that markets are fractal. So larger time frames are comprised of smaller moves and smaller time frames. And the way that I explain this, I think you'll get this in a hurry here. So I've got 4 simple rules, which I want you to steal these. I want you to apply these starting today to your markets and just go ahead and use them and tell your brain that you invented these. That's fine, because I'm sure that somewhere along the way, I borrowed them from somebody else. So I'm just passing them along here. Rule number 1 is that larger time frames dominate the price trend. So if you have a weekly uptrend, it's going to have more power than a daily uptrend. Or in the case of like yesterday, a daily pullback, it's going to have more power. That uptrend is going to have more mass behind it, if you will, than a quick little pullback at a smaller time frame. So what I want you to do, choose an anchor chart. And that's going to anchor your trend, and you want to trade in the direction of that anchor chart swing. Let me give you an analogy here on how this works. Say you're walking your dog from point A to point B. Now, if you're like me, I walk from point A to point B, and because I'm thinking about something, so I'm just completely absent-mindedly walking directly from point A to point B. Now, meanwhile, the dog, if it's anything like my dog, they have an amazing sense of smell, and they have an incredible need to mark everything around them as theirs. So what the dog is going to do is dog's going to be all over the place. And the dog is going to be limited by the radius of the leash on you. So, but it's going to be all over the place, right? So unless it's a show dog and walking directly next to you, if anything like mine, it's going to be all over the place. But notice how you and the dog arrive at the same place at the same time. So this is representative of like an anchor trend in this case, which is you, and a signal chart or a smaller time frame, which is the dog, which is a smaller mass, but tends to walk around a lot more, move around a lot more, and goes quite a lot more distance than the anchor chart does. So this is the analogy. I want you to, if there's nothing else that you learned today, think of this as the analogy between larger and smaller timeframes. Okay, so what we have here, a little bit of terminology. So typically what we do is we assign what's called an anchor chart. And we want to trade in the direction of the anchor chart swing. And then we use a signal chart. The signal chart is going to be a multiple of 5x time frame. Doesn't have to be exactly 5x, can be somewhere similar to that, but I find that 5x works really well. So in other words, if this is a weekly chart, this can be a daily chart, or maybe even a 78-minute chart, which would be 25 times faster. Daily chart's going to be a slight multiple difference of that. Or we have a monthly chart and then the weekly chart, or even a daily chart, which is going to be roughly a 25x difference from the monthly chart. So you're going to pick an anchor chart and a signal chart. This is the way we're going to do things. The signal chart is to make signal entries. The anchor chart is simply there for context and trade in the direction of the anchor chart. Okay, so how do we apply rule number 1? Okay, so it's quite simple. Understand what larger time frames to add to your signal chart to create an anchor chart. There's many, many different ways, and we'll go over some applications of this later on. We'll show some different lengths of swing trades versus intraday, maybe even futures trading. So understand how to read the trend and swing direction of your anchor chart. And this is where it's helpful, and we'll show you something different here in a minute, but this is where it's helpful to understand what is the trend. So if we're looking at this as the overall trend, so I'll put a big T up here. Each one of these is a swing, swing up, swing down, swing up, swing down. Each one of these is a swing. And the idea here is that we want to trade in the direction of the swings, which are going in the general direction of the trend. Remember, this is all very simple. We make it difficult on ourselves because we trend emotionally. We trade with the social crowd. So just trading in the direction of the anchor chart swing, enter that anchor swing on the signal chart. We'll show you that in a minute here. Larger time frames dominate the overall trend. That's rule number 1. Rule number 2 is the exact opposite of this. Reversals start from the inside out, and then they propagate higher. Reversals start from the inside out. Change to market character begins from the inside, or from the smallest time frames, which you don't really see until after it's happening. So this is a property of nature, is that change happens from the inside out. One single virus can infect a single host cell, and then it begins to multiply and swamp your immune system. So a trend reversal starts from the smallest time frames and progressively propagates to larger time frames. If you have a change to your car, it's going to happen incrementally where you don't even notice it. Change happening at small levels are an early warning to failure or reversal. So we can see things like this with trend changes, with a top reversal where we have higher highs and higher lows, all of a sudden changing into lower highs and lower lows. And the same thing is happening on the bottom here, something which is showing lower highs, lower lows, transitions into higher highs and higher lows. Now, don't worry about that. I'll show you something that you can identify reversals a little easier than understanding Dow theory price action. So change always propagates higher. So you'll find that, like in this case, from the March 2020 bottom, the daily chart reversed quite quickly. Within just a few days here, was showing higher highs and higher lows from the March 23 bottom. But it took the weekly chart a long time, several weeks, before it too was showing an uptrend. So reversals propagate higher in time. They always start with the smallest time frames, and then they work themselves higher. How do you apply rule number 2? Understand what smaller time frames to use for your signal chart. Remember, you're going to use the signal chart, which is faster. Understand how to read the trend and direction of this smaller time frame chart, but I'll show you a cheat here in a minute. Trade in the direction of the anchor chart swing until you see the signal chart reversing. Reversals come from the inside out and they propagate higher. That's rule number 2. Rule number 3 is very, very simple. Ascending patterns, which go like this, always eventually break to the downside. Descending patterns that go like this always eventually break to the upside. This is just a filter. This is not a trend or trade entry. Okay. Oops. Don't want to skip by it. So what goes up must come down. What falls must eventually rise again. This is just simple physics. This is something that's been happening in front of you for a long time. Maybe you just haven't noticed it, right? So signal chart trend lines. I put a trend line on the signal chart, and typically right around the time that it will reverse its polarity. So what I mean by this is lower highs, lower lows. Right around the time that it reverses to higher highs and higher lows is around the time that it breaks the trend line. It's just a filter. It's just an early warning for this, but it's a simple rule and it's something that you can use. This works on every time frame, but obviously you'll see more instances of this in a smaller time frame. You also see more noise. You also see more false breaks. Eventually there will be a no doubter break and the cycle will continue. Ascending patterns break to the downside, descending patterns break to the upside over and over and over again. Check it out and see. That's rule number 3. Now let's get to rule number 4. Okay, so many people have bought in on this rule of overbought and oversold. This has been around for the last 40 to 50 years. Overbought and oversold. Traders got fed this notion of an asset being overbought or oversold. Says who? Just because it's always been that way, right? We quietly go along with this theory because we all understand the difference between hungry and stuffed to the gills, right? It just makes sense to us, you know, and we love to assign valuation to something. How many times have you said to yourself or to others, hey, there's no way that this market deserves to be up at this level? How many times have you said that? Probably lots of hands out there. I've said it at one time or another myself. But we cannot assign valuation to something. In a world where there's no limit on the money printing, who are we to say whether something is overbought or oversold? So I think this notion is outdated. It's obsolete. It's not the way that markets move. Markets can remain irrational far longer than you can remain solvent. How long have you seen something go like this? Overbought, 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 and just continues to go higher. Like forever, right? This has been happening for at least the last 15 years, right? So markets move differently than this. They don't run. They run as far as they can until exhaustion, and then they consolidate. So price expansion goes to exhaustion or consolidation. Markets will run as far as they possibly can, well past what we judge them to be overbought. Seriously, way past that point. And oh, by the way, they also sell off way beyond what we judge them as being oversold. Range expansion goes to range contraction. Then it goes to range expansion again to range contraction. This is all it does. It moves back and forth between expansion and contraction. The cycle repeats forever. It's not overbought, oversold. Markets just copy nature. If you were to summit, I mean, we can use Everest as an example here. What you're going to do is you're going to start off at the base camp. You're going to go as far as you can to the first base camp. And guess what? You're going to be completely worn out. Range expansion goes to range contraction. You're going to spend several days there recovering and acclimating yourself to the new altitude. Range expansion again, you're going to go for camp number 2. Range expansion goes to range contraction. You're going to consolidate at camp number 2. This is how markets move, guys. This is how they move. It's not overbought, oversold. It's expansion and contraction. Just like nature, everything works on expansion and contraction, not overbought, oversold. So we can see this on the charts. If we use something like, you can use the ADX, but I prefer to use what's called the choppiness index. And I didn't even notice this before. We have this very cool Batman ear pattern here. So, but what you'll see is it's almost like a fuel gauge where contraction will build up potential energy, almost like winding up a spring tighter and tighter until it moves. And it's going to move in one direction or another. And this is only going to tell you the potential to move. And here we go again. We have another high value here, potential to move. Some of you have heard of the squeeze indicator. This is very similar to the squeeze, but it also shows the opposite side of exhaustion. So when it breaks out, it moves to exhaustion, range expansion, moves to range contraction, just like this, until it breaks out again. Expansion and contraction. This is all it is, guys. We can also see this in different charts. We can see it on tick charts. We can see it on time charts. We see it intraday. We see it on monthly charts, weekly charts, daily charts. Expansion and contraction happens at every time frame. So how do we apply rule number 4? These will give us an early warning when a consolidating price chart is about to break out. So if we see something running in a big range like this, price just banging around inside of a range, we've got a lot of potential energy and we're going to get a break in one direction or another very soon. Similarly, when we see a chart go completely parabolic like this, we know that at some point here, very, very soon, we're going to see that pull into some type of corrective behavior. Range expansion leads to range contraction and vice versa. So I use the CHOP index. It shows the linearity of the current trend, and it does a very good job to show an effective, almost a fuel gauge behind what the price is doing, either empty or full. Okay, so that's rule number 4. We've been through the 4 rules. So how do we do this? How do we measure energy and direction on the chart? First of all, let's talk about energy. Again, the study that is the best way I find to use the extremes of expansion and contraction is what's called the choppiness index. And it's not available on every package. For example, like you can't get this on, it's not available on E-Trade. It's not available on TD Ameritrade Thinkorswim. It is a custom study. It's available on some packages like TradingView, but not every package that's out there. So it just shows basically, here's an example of this where we have a flat market. It's coiling up, building up energy. That fuel gauge is on full. And then here comes the breakout down to empty. And then we're empty, range expansion goes to range contraction again. This is just another form of corrective behavior. So I use the CHOP index, what I call the fractal energy indicator, because we use it at multiple time frames. Here's the next thing where we can go into direction. So measuring direction, you can either use price action, which I've learned over the years, and I can teach price action, and a lot of you can read price action as well too, a transition from higher highs to higher lows, things like that. This is today's intraday chart, by the way. So it can take a while to understand this. This is not something you learn over a weekend and just bolt on and just boom, there you go. This does take a while to understand and put all the pieces together, depending on the time frames and depending on what type of charts you're using, et cetera. So using price action is, I'll never say you can't do this because I love using price action to make decisions, but it's not the simplest thing for most people to acclimate themselves to. This is why most people gravitate towards indicators. We can also use oscillators, and this is where most people try to use an oscillator, but the problem is most standard oscillators are trailing signals. They're way behind the actual reversal in price. So like today's reversal is not even showing up yet on the stochastic because it's still dealing with the downside cross from a couple of days ago. It's just too slow. It's a 14 period trailing oscillator. It's going to take a long time to reflect that dip and that subsequent upside cross. So what I'd like to introduce to you guys today is the RSI, which is Relative Strength Index, but we're going to use what's called the Laguerre time transform. This is a French mathematician apparently that wrote the Laguerre time transform. You can Google it and you probably will get the same kind of result that I did several years ago when I tried to learn more about the Laguerre time transform, which was, I'm not a math major. So unless you've got a master's in mathematics, it's not going to make any difference to you. What it is, though, it is an adaptive time transform. Most studies are based on a fixed time transform, like 14 bars, 7 bars, 9 bars, 13. They're fixed. It's always a fixed sample that's trailing. This is not. The Laguerre time transform is adaptive to what's going on in the price. So when it makes a dramatic move, it adapts and it very quickly. Look how quickly this one is already reflecting that upside move here. So all of these are like this. We're looking at the light blue line, by the way. This is the RSI in Laguerre time. And this is something I've been using for a number of years now and is a great directional signal generator. Very, very accurate, very responsive too. So this is how we can measure direction as well as the context of what's happening with the price. So when we put them all together, we put the RSI together with the CHOP index. The CHOP index is yellow here on this study. And this is my favorite indicator. This is what I'm talking about today. So one study shows us the dimensions of energy and direction at the same time. This is all I need. I don't even really need the moving averages on there unless I'm doing a automated scanner. Okay, so now what I'm going to do is move into the 3 steps that we use for trade setup. Okay, we're going to back them out here. Step 1, 2, 3. I'm going to go through these quickly so you can always watch this again on the replay if you need it. So step 1, we need to anchor that trade direction. Remember rule number 1 of fractal energy? What direction do we trade? Long or short? We go with the trend. We go with the swing on the anchor chart. Time frame selection will depend on the application, right? So buy and hold trades are going to have much larger anchor charts versus an intraday futures trade. So that should be something you guys already know. So context here is massively important. Somebody just following a very small time frame chart. This is what I see all the time with retail traders. They get whipped up and down, back and forth here because they don't know what is going on. They just get beat up in these consolidations. They go long, they go short, they go long, and they go short, and always at the end of the move before it reverses because they don't understand that they're, in this case, a weekly consolidation pattern. Using multiple time frames will allow you to understand the context of what's going on. This is extremely powerful. And we talked about the anchor versus the signal chart. Like in this case, perhaps we're going to use a weekly anchor and an hourly signal, which is going to be roughly 25 times faster than the weekly anchor chart. But we're going to trade in the direction of the anchor chart swing or the trend. And so we're going to use that hourly signal to, when we get mean reversion back into that anchor trend, we're going to take an entry here. Okay, so again, use the anchor chart. I want to paddle downstream. I don't want to paddle upstream. It requires zero effort to maintain the downstream direction. So trade in the direction of the anchor chart swing. Write that on your forehead or put it on a Post-it note on your monitor. Trade in the direction of the anchor chart swing, which presumes that you've defined an anchor chart direction as well too, and a time frame. Now here's a trend cheat code, which is if you can't figure out what direction that the price is going in, use Heikin-Ashi candles on your anchor chart. So this is a cheat code that I use on some of the strategies that I do, just because it really makes it pop. It makes it really easy, makes it very mechanical, almost to the point where a computer could trade in lieu of yourself. So how do we apply step number 1? Understand what primary time frame to select to fit your trading strategy. That's your anchor chart. Understand how to read the trend and swing direction, trade in the direction of the anchor chart swing, use Heikin-Ashi candles if you need. So we've just determined what direction to trade in, but we have not determined the entry point yet. So for this, we need to add a signal chart. So now we're going to get into the cool stuff here. Step 2, we're going to signal the entry. Yeah, Stephanie, even fast stochastics are not going to be fast enough. Reversals are the holy grail of trading. Our entries need to be based on these reversals. So reversals are what everyone's after, right? Reversals give you the best reward to risk on this. A true reversal of trend offers that best reward to risk. Okay, so our anchor chart, though, is going to be really way too slow for us to, it's lumbering, it's slow. It just will not give us the responsiveness or the speed to be able to determine reversals. All we can do is trade in the swing direction. So change happens from inside out, as we talked about. Same thing there. So we're going to look for signal chart reversals. If you know how to read price action, you can look for these reversals. Something former uptrend starts to make lower highs and lower lows. There's your reversal right there. Former downtrend starts to make new highs, higher highs and higher lows. Signal chart is much faster at catching reversals. Now, this is great if we're just going to use price action. And we talked about change propagating higher as well too. So what we're looking for is we want to be trading that anchor chart, looking for that trend in that direction in this case, and then looking for reversals on the signal chart. Look for reversals back up to the upside on the signal chart. Now, this requires you to read price action. So what we're going to do is instead, and we can select the signal time frame like this. A factor of 5 is usually what I pick to show a difference, either 5 times different or 25 times different between the anchor and the signal chart. Okay, so this is all about step number 2, or rule number 2 for this is reversals come from the inside out, propagate higher. Okay, so that's step number 2, signaling the entry, but we want a cheat code here. So we're off to a good start, but we need the help of one of the most accurate studies around. So the challenge is reading these price reversals for most of you. And it does take some time and some experience to learn that. So this is where we're going to use the RSI Laguerre with embedded fractal. And we're going to use what are called hooks in here. We're going to use the RSI hook to show the reversal. This RSI hook is where we hook up from, at least in the long here, and this is today's signal, by the way. This is where we hook up and the RSI goes above the 20 level in the direction of the anchor chart trend, in the direction of the anchor chart swing. This is when it reverts back to the mean again of the anchor chart swing and trend. So applying step number 3, we're going to start by identifying the anchor chart trend and swing. Okay, remember rule number 1. And once we're comfortable with our read on a valid swing direction, we're going to look to the signal chart for the entry, but we can also use the RSI Laguerre hook signal, which is extremely responsive, to help signal the entry into the new signal chart trend. Okay, so let's put everything together. We went through the 3 steps, and I'm going to show you 3 different applications really quickly here for the 2-pane fractal strategy. First of all, swing trades. If we're doing swing trades, let's apply this. We're going to use this 2-pane fractal strategy. So manual chart setup, this would be like a daily chart and a 78-minute chart. And this is going to be, you know, a 5-to-1. If you've ever seen 78-minute chart and wondered where that time frame came from, daily is 6.5 hours. And if you divide that by 5, you're going to get 78-minute chart. Okay, so we can use manual chart setup We can use different grids. This works in TradingView. This works in TradeStation. This works in Thinkorswim. We can also set up an automated, and this is really cool. So stick with me on this thing because we can automate these signals. And we do this into our platform every day. So daily, in this case, we're going to use 60 minutes because you can't scan on a 78-minute chart. What we're going to do is we're going to look for trends to the upside. In this case, we're going to look for upside hooks. So here's a hook signal right there to the upside. Here's another one. There's several of them on here. And so this is actually our automated scanner. This is what we're looking for. So we do some trend filtering. In this case, I'm only looking for a small number of stocks that we scan against. We're looking for the daily chart to have a certain amount of energy to it. We're looking for an RSI scan here that tells us on an hourly chart when that is hooking up. And we also look for, in this case, the daily chart and the weekly chart to have a certain amount of energy. And this is actually these are the signals that we fire into the room. So you can have these things scanning in the background and giving you signals the entire time. Okay. So the whole time of these strategies is normally 1 to 3 days. Buying stocks is too capital inefficient. So typically what we do is we use option spreads to maintain our risk on the trade and give us a very high probability outcome. Okay, so that's an example swing trade, and we showed you a manual as well as an automated scanning approach. Let's look at intraday options. These are intraday signals using directional options. So in this case, what I can do is I can actually use tick charts. These are my favorite type of charts to look for patterns in because it's volume adapted. If there's no volume, there's no candles printed. And so with Thinkorswim, the largest tick charts that I can use is 10,000 and then a 2,000. So this is the anchor chart over here. This is the signal chart over here that I'm taking signals from. So you can see that there could be potentially a couple of different signals a day coming in from this. Okay, the reason I like to use tick charts is because this is a personal preference. It gives me much better patterns. TradingView, unfortunately, does not support tick charts, nor do many other popular free brokers. Thinkorswim is the only one I'm aware of that offers tick charts for this. Choosing our option, typically what we can do is we can pick a day 0 option or a 1 DTE or 1 day to expiration option. In this case, if we do a 0-day option, it's going to be about $100 or so. A day plus or a 0+1 option is going to be probably anywhere from 150 to 200 on the spiders, depending on the level of implied volatility. But you can see in this case, if we have a 10-point move on the full S&Ps, which is a 1-point move on the spiders, something that we would buy for roughly $1.56 would go up for roughly this amount here, which would be about 40% in capital. So that's not bad with a 10-point move to get a 40% return on capital on, in this case, $150. We can also use Qs for this. The Qs have also gone 3 series a week now. So you're going long the front at the money option, and the most you can lose on the trade is the debit paid, although it's better to stop out and re-enter if you don't like the signal. So SPY options will have at most 1 day left. And like I said, they trade for about 150 to 200 on 1 DTE and about $100 on 0 DTE. So focus on getting out, getting your fair share and getting in, getting your fair share and getting out. Don't dawdle. This is a wasting asset. Okay, so that's directional long options. And there's a lot of people that like that strategy because they're uncomfortable with futures. They don't have futures trading ability, perhaps in their IRA for whatever reason. And so they go with long options for something like this. So our last application before we wrap up today is for futures. So this is a great application of the two-pane fractal system and is not impeded by pattern day trader limitations. So our chart setup in this case, and in this case, I'm using TradeOvate, and I was able to find the RSI Laguerre on TradeOvate for this as well too. Anchor chart, signal chart. In this case, I'm using a 1375 by 275 setup for it. So this is a 5-to-1 time frame differential on the tick charts. Trading in the direction of the anchor chart swing, looking for any kind of entries into this. Very, very simple. Okay. Don't forget to use the ladder interface. If you're going to trade futures, don't use anything but the ladder interface using one cancels other bracket orders. And the instruments that you can use is, I recommend the micro NQ, which is the MNQ, or the micro YM. You can also use the ES if you want to, the MES, but it's a little bit larger in terms of leverage and a little bit chunkier. Okay, so some strategies for this. These are the best for pure directional trading. I typically just use those for scalping. Do not hold overnight. They represent an unlimited loss instrument, which can hit your margin limits. So always trade with a bracket, never push your stop out. Okay. That is the third application. So let's summarize here for today. We've gone over a lot of information. Let's kind of wrap it up here and get you ready for the next person. Step one, select an anchor chart. Understand the trend and the current swing of what you're looking at. What direction is the trend? What direction is the swing? Trade in the direction of the anchor chart swing. Step two, select a signal type or chart time frame that's at least 5 times faster than the anchor chart in order to catch the faster reversals to the mean and pullbacks. And then we can also use step three is we can use add tools. We can use Heikin-Ashi candles, and we can use that RSI Laguerre study for catching that faster reversal. Trading instruments that we want to use depends on, if we're going to do swing trades, we want to use front week debit spreads. Intraday options, we want to go with the smallest time available. So we're entirely gamma. And futures trades, start with a micro E-mini before you go up to the regular E-mini. We can use that RSI Laguerre. Consider reducing the number of studies on your charts and learn to apply the RSI Laguerre with the embedded fractal energy. It's a very, very efficient use of real estate for your chart. And we can also filter based on things like fractal exhaustion, on the trend lines, everything like that. Filtering is about standing to the side when conditions are less than optimal. So we do this quite a bit in our trading room. I'm very, very conservative in our trading room about filtering trades that could be potentially dangerous. So once you gain experience in the markets, you'll be able to better identify those conditions that offer higher versus lower probabilities. Okay, so thank you for your attention. You may want to know where to go from there and how to get a hold of that study, whatever. It's my belief that everybody needs to adopt one simple directional strategy that can be used for anything. So think about the power of that, where you don't have to learn different strategies for different trading applications, where one thing will do literally everything that you want to. You have one tool that does everything. Because it's different time frames, it's still the same chart. So how can you start with something like this? Consider joining our community. There's a couple of ways to do this. You can do this for free if you just go out to elite.ReadySet.trade. You can join us for free in our community. I've got something else for you here today, though, because you might want to consider adding the course that we have. So what we do at ReadySet.trade is we do live trading rooms. We do 5 times a week daily newsletter. We have a live online community of other people exactly like yourself. We do live trade notifications and adjustments. There's nothing hidden. Everything is completely transparent. We have multiple trading courses and strategies and techniques, all for the same basic price, right? Strategy briefs and research notes. Everything is out there. We also do scan alerts that we fire into the room. So if there's a scanner that we've defined, We just publish it straight out to the room, as well as the live trading rooms where you get me yakking at you for, every morning on the open. Okay. So what we're going to do is we're going to offer you guys, if you want to know more about this, if you just want to join the course for the two-pane fractal trading and understand better how to use the RSI Laguerre, we have a sale going on for $47.99 right now, the two-pane trading course. You can get that for $47.99, one-time payment. There's no recurring billing. It's a $99 street price, so you can get a quick discount today. Please don't use an iPhone for this because that forces us to go through the Apple Store and it would make everything more expensive. So what's in the course for this? You can see the different chapters in here, the overview of the two-pane system, why use it, the basic elements of it, everything about the RSI Laguerre, applications for weekly swing trading, intraday option trading, as well as futures trading. Okay, so all aspects of this. It also includes indicator code source and assistance for TradingView, TDA, Thinkorswim, and TradeOvate. Plus, it also gives you member access. So again, free member access will give you things like the trade scans coming into your room, articles by myself. Some of the courses that we have available are available to our free members as well too. Okay, so you're part of a community and everything that entails. The results that we have in the room right now, since our service inception, we've been running this for about a year and a half now, 269 trades during that time. We've won 82.1% of them. And right now, for every dollar that we lose in our trades, we're winning $2.93. That's what a profit factor is. So profit factor 2.93 is pretty damn good. I'll stack that up against anybody else. So what's that link again? It is ReadySet.trade, or I'm sorry, ReadySet.trade/TWO. ReadySet.trade/2. Okay. So I'll bring that back to here and I will take any questions that you have in the remaining time that I have. So Stephanie has got a question on the efficacy of the Ichimoku cloud for signals. If you start talking about the Ichimoku cloud, all of a sudden you start turning into, that is a very religious topic that people will literally like fight wars over. And I don't trade with the Ichimoku cloud. Again, it is, to me, it is still, regardless of the fact that people say, hey, here's the future price projection to this, it's still a trailing indicator. It doesn't have the adaptive time element of the RSI Laguerre. So no shade I'm throwing on the Ichimoku cloud. I don't want to, I don't want to get involved in that religious war, but it's not something that I use right now. So Stephanie, yeah, you can trade futures with this. This is a fractal system because it's fractal timeframes, different. You're using the different timeframes to identify the major trend as well as the minor reversal points. So how do you join the trading room? Probably the best way to do that is just to go into, you can just join from Elite. Here, I'll just type that out to the message. If you just join for free, if you just go elite.readyset.trade and join, you can upgrade to the trading room. It's quite simple to do. Remember, do not use an iPhone if you're going to join because you won't get the option to join. You'll be able to join for free, but nothing beyond that. You'll be able to join for free, but nothing beyond that. So people that join with an iPhone, unfortunately, don't mean to get into the cell phone religion here, but it forces us to list on Apple's store. And if we list on Apple's store, then it's all of a sudden it's like 20% more expensive. So we decided to pass along the savings to the customer by not listing on the Apple store. Okay, any other questions? Anybody else? What hours is the trading room open? When does it start and end? I'm of the belief that you don't need to be trading all day, and I believe that actually works against you to trade all day long. So I open up the trading room at about 9:20 in the morning Eastern time, and usually we're done about an hour later or so. So it's we run for about the first hour, and then there's nothing after that. Now, if I make adjustments to any trades, if there's something that I think needs to be done, I will get on and do another live session. You know, if we have some kind of crash or something like that, I'll get on in the afternoon. But what I found myself is that if you can limit the amount of time that you actually trade, that you're in front of the screens to a very small time frame and be very, very efficient with your time, your profitability will increase. So that's what I firmly believe in. So I do about an hour a day, and that's usually enough for us to get done what we need to do. Is the two-pane included with the elite membership? Yes, it is. So if you just join the elite membership, you get access to every class. You get access to every class that's out there for as long as you are a member of the service. With the 1375, 275 tick for futures, what is the typical risk for a 1 E-mini on ES or NQ? Depends on the volatility, sir. So the tick frames, the tick charts are irrespective of what the actual risk is. So the risk will depend on the volatility, not on the tick values. How can you contact me directly? Let's see. Back to the first slide at doc@ReadySet.trade. Here, let me give you my email address. Doc@ReadySet.trade. Where would one start? Which video? And I'll wrap up here in just a minute, Dave. So let me bring over the platform. I will bring over the platform and show you guys what this looks like. So ReadySet.trade, what you do is you're going to start with the trader courses here, and step 0. You're going to start with step 0 on the courses. How to get started trading options, the secret to trade like a pro, the simple system to trading $100 a day, the wheel strategy. And it starts to get into like step 6 is where we get into the more of the meat of the strategies like cash secured puts, covered calls, vertical credit spreads. We're also doing quite a few of the 45-day laddered iron condors. We do 3 days a week. We do 0 DTE iron condors in the room. Okay, here's all about the RSI, the GARE intraday directional strategy. So go through the courses. Also, if you want to join with the elite, you can see you get access to everything that's out there. Okay, I think we're set. I want to thank everybody for your attention. Hopefully you learned something today. Please feel free to reach out to me if you have any questions, or I look forward to seeing you in the room, whichever way that you want to join. So you can join for free. You can buy the two-pane class for $47, or you can become an elite member today. Dave, thank you very much for allowing me to present today, and I look forward to the next time we join you here at Timing Research and Trade Out Loud.